Hi, Mark and Maria. Thank you for taking the time to come in today and speak to me about your financial plan. As you know, this is the follow-up meeting to um, our first meeting where we gathered the data, and I've analyzed that data, and now I've developed a recommendation for you. Once we've kind of gone through that, there's two other things we want to look at today. It's really important. We're going to look at the retainer agreement as well as an investment policy statement. Both those we'll review on an annual basis, along with the financial plan we'll look at it annually. However, it's super critical for me to provide you the best plan possible, that anything comes up in the meantime, anything you think that can affect our financial plan going forward, please do share that with me. As you know, there's some great strengths here to start with. Both dual income, good balance sheet, college funding, aside enough there to fund Ricky and James, and we'll go into that later. Opportunities, we think we've got a lot of opportunities here where we can really shore up your financial picture. Insurance, estate planning, asset allocation, as I mentioned, the college funding, we're going to look at how to do that specifically. A few other items I'd want to touch on it really quickly: grandmother, and then any potential conflicts of interest. Okay, let's dive right into this. So what are our main concerns? Our main concerns are retiring in a few years, in 17 years, and funding for Ricky and James, and how are we going to do that? So there's really what we're going to do is, let's go through. The great thing is, Marie, you do have enough assets right now where we can put those aside and establish a 529 plan for Ricky and James. And now what the 529 plan does, it allows you to put money in there that will grow tax deferred, if at all, tax based on if college expenses are paid for. We won't have to pay any taxes along the way in terms of investment gains, interest, and that type of thing. And also, you won't be penalized for taking that money out if it's a qualified educational expense. So based on today's dollars, $22,000 a year for college expenses, what we're looking at, inflating those at 6% a year, you're looking at a total investment down the road of about $258,000. Now, we can do that today if we put $190,000 into an investment portfolio that will grow for the benefit of Ricky and James to start pulling at that once they begin college. We can do that. There's great low investment options within the 529 plan, so that's what we want to do on that front. Retirement. There's two ways of looking at that. We want to look at, okay, once we retire, we have a certain amount of assets, and those assets depleted to zero up based on your life expectancy. It's called the annuity approach. The other way is capital preservation approach, which means you're going to have a lump sum there in your portfolio when you retire, and you're going to want to pull on that every year to support your lifestyle, which is 80% of your current income, and have some funds remaining for either philanthropy, children, or whatever you choose to do with those funds. Right? So we've got money set aside for college. We're going to have to look at that big increase in terms of annual savings. Another issue is insurance. One of the big things is two issues we're really going to want to shore up right now. Our boat insurance, we want to get a separate policy, much like an automobile policy works the same way. We want to get your boat a policy. We're going to want to increase your homeowner's policy to it's called an HO3 or an HO5 policy. The big difference is the current policy, you're only covered under certain named items, where you want to be in a policy where you're covered unless a specific item is listed by the insurance company. It's really important because I'm also recommending that you get an umbrella policy, which means they typically will require a certain level of primary insurance, so primary auto and homeowners, before the umbrella kicks in. So we want to get that. Other thing, I want to go back to retirement for a second here, is we want to set aside immediately, start maximizing your 401k to the point at least you get that 3% match every year from your employer. It's free money. Get it from your employer. We just have to set aside funds and they'll match it. It's really important that we take advantage of that. The second big thing that's really going to free up a lot more cash flow than you might expect is itemizing your deductions. Lots of potential gain there. Currently, your cash flow is about positive $10,000 a year, whereas if we itemize your deduction, you're going to find about another potentially even $20,000 there. So that's going to really allow you to fund your retirement accounts and potentially look at the capital preservation model where you might have assets remaining for Emma or philanthropy or anything else that you may desire. The other thing that we want to do is refinance your home. One of the big things that's really going to be a key to a nice lifestyle in retirement is getting rid of your debt. So we're going to take any free cash flow we have from your tax savings, pay off your mortgage, or pay off your margin, pay off your automobiles, pay off your credit cards, and then the remaining funds will be able to go in retirement assets for you. 60-40 portfolio. When we talk about the IPS, we'll go over that in detail. If we add all those variables together, you're going to be able to accomplish your goals. But it is critical that we do those things according to plan. You have to set up that 529 plan. You have to maximize your 401k to at least get the match. We're going to pay down your debt as soon as possible, refinancing from a 30 to a 15-year mortgage. The last thing we want to touch on is we want to do our estate planning. Critical that you both obtain wills. We need a living will. We also highly recommend healthcare directives. And finally, given that life insurance policy that we're recommending for Mark, which you should obtain $1 million policy, given any kind of future funds for your family as funeral expenses and other things, I'm recommending at least $1 million in terms of life insurance. It's also important that we draft a life insurance trust document so that can be set inside there so it doesn't flow into your estate taxable that would happen upon your death. We want to kind of get out of probate, which is a thing you've asked about probate. Probate is just simply a method for the county to make sure there's an orderly transfer of assets and liabilities upon someone's passing. That way there's time to come back and say, hey, you owe me money, you don't owe me money, and it gives the court time to make sure it's a clean cut and assets start anew. Finally, let's talk about your sister for a second. I did want to just mention any potential conflicts of interest. As you know, I'm friends with your sister. This in no way inhibits me from providing our services to you, and you should also be fully aware that no data or information is released to anybody. There may be instances such as a lawyer that will help you draft your documents where we can share information, but again, that's only upon your consent and with kind of you mixed in with that because we want to make sure you're involved in the process. Finally, the investment policy statement, like I mentioned, what the purposes of that is talk about goals, any conflicts of interest, or excuse me, constraints on your portfolio, as well as any risks that might be down the roads in terms of asset selection, portfolio needs, liquidity needs, and those type of things. We'll go over that after we're done here with the plan. So again, let's tie it all together. We're tying it all together. We want to itemize your deductions, maximize your 401k, get an umbrella policy, increase your homeowner's coverage to a better policy, boat coverage, and get the estate planning documents taken care of. So with that, we will wrap it up, go over those documents, sign those documents, and I think we'll be able to start implementing your plan, and then we'll review it quarterly with you. Thank you for taking the time to meet with me today.